What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for May 4th, 2023. So if that sounds like something you're interested in, consider subscribing as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So today was the first day of a series of 3 days where we're going to get some really big and pivotal information that is essentially going to kind of guide us over the next couple months. And considering we're almost halfway through the year, again, it's going to be extremely pivotal considering the current state of the market. And the state of the market I'm talking about is this final stage that I have been highlighting. Essentially, we are in the bank crisis stage and recession stage. That is essentially, again, the final act in which I think the market will pivot out of. But this particular act is going to be extremely nasty, uh, more so than anything we've essentially seen to this point. But today started out with new monetary policy. We did get another 25-point basis move, so that was expected. That does put us over 5. So now we're at 5 to 5.25. Something that was really concerning, even going way before we even started talking about interest rates over 5. We said that if we did somehow breach over 5, that it took a very long time for us to actually come down from 5. I don't believe that will ultimately be the case, but we shall see. But when that came out, the market was really undecided. There was a huge indecisive candle, and it went back and forth and back and forth. There was a lot of verbiage that was essentially changed, and it's very dynamic and fluid language, meaning that the market, essentially, whatever the Fed are going to do, is going to be solely based off the current information that's going on. So Powell has kind of talked about that multiple different times when every monetary policy that we've had, that it really depends on what the current state of the market is. We do know that we have reached a breaking point, and ever since SVB went down, it kind of delayed the failure of First Republic, and ever since they had earnings last Monday, we lost First Republic, and now we're starting to get a lot of regional banks that are just absolutely falling off the face of the planet. But with that being said, we got the 25-point basis move. Powell came on. Now, I have to hand it to Powell. Powell is very good at his job. He knows how to skate around questions. And again, it was misleading for the market because the market wanted answers, and he purposely did not give an opinion. He came in with essentially no opinion, and he pretty much dodged some big and very, very good questions that came out, ultimately asking about recession, asking about the banks. He kept circling around. He tried to be the Powell of old. He tried to be very neutral and very broad on his answers. And so, that being said, we don't really know. He did hint at a mild recession, but he tried to combat it with saying that things were good, that they could still potentially. And something I've talked about is he would always try to slowly grease the skids, but he did point out, not only did he mention a mild recession, but he did point out the fact that you will find out in the next meeting notes. So when the next meeting notes come out, I believe they come out in about 2 weeks. When those come out, you're going to hear a lot more talks about recession, and that might be the recession we're looking for. That I was kind of hoping Powell would say more about it. They kind of just briefly caught it towards the tail end of his talk, or his when he was fielding questions that about a recession and potential mild recession we could be hitting. Again, there's no such thing as a mild recession. It's going to get nasty, and it will continue to get nasty because we are continuing to increase rates. Now, with this increase rates, like I've talked about, the regional banks are starting to panic. And something I talked about, we start losing regional banks. You're going to start putting a lot of small businesses at risk. Once you start putting small businesses at risk, that means more people are going to get laid off. We're seeing more and more numbers. Essentially, the available job numbers that had come out are extremely concerning because you are starting to see recession type numbers. this is the concern. It is finally starting to show up, and something we've talked about when it comes to the impact of interest rates in itself. It's a very, very lagging indicator. It took us a whole year for us to get our first bank failure. Now we're starting to see a lot of them start to happen. We've lost the 14th biggest bank, the 16th biggest bank, just in the U.S. over about a month. It could have actually been a lot sooner than that, but again, they bailed out First Republic before it got too out of hand. And so now that they spaced it out, now we're starting to see more regionals start to have a lot of problems. But not only that, so that is essentially the first piece of the puzzle for this week, and that was huge, huge, huge. So I actually would not be surprised if we start getting more panic in the banks again. This banking crisis is not over. It's something we talked about even since the first SVB, that it doesn't matter what they're going to tell you. Of course they're going to tell you they want it to be utopic because they don't want to draw panic. It's the last thing you want to do, and that was like one of the first things that Powell said as soon as he started his statement today was we are strong and resilient. And then he started getting into all the other spiel, a lot of normal stuff he talks about, how it's very adjustable onto what data is given, right? And understand that his sole intention is to fight inflation. And so we will continue to see rates. But there was some hope in there for the pivot, which again, the pivot ultimately it could potentially give us a short-term pump, but you still have to understand that rates are still so high that these banks are still very much in trouble. So it wouldn't even matter if they raise it in another 25, but they did. So just be aware that it doesn't even matter. It's only you're going to have this prolonged period of time to where these banks are essentially running out of funds to be able to sustain themselves. And then again, understand the tightening that's going on. They're not making money, right? Because no one can actually afford to get a loan. And that's how banks make money, is by lending out money. And if they can't lend out money, then there's going to be some big problems. And then if you have people going out on bank runs wanting to pull their money out, that's going to cause a lot of these banks to go under and fail. And we're just on the brink, and we're starting to see that now more so this week. Ever since essentially First Republic reported earnings, it's starting to get worse and worse, and we're seeing that almost day by day now with these banks. And so there's something you have to watch is they'll start pulling down the main index. And then tech has been kind of the safe haven, people trying to shift their money into tech. You're kind of seeing that, but ultimately you have to understand when there's mass panic, it doesn't matter what industry you're in, they will all sell. And something what I've talked about, even Bitcoin, you can't, Bitcoin isn't going to break apart when you're talking about recession. And so with that being said, tomorrow we have Apple earnings after close. So after close tomorrow, it's going to be, again, one of the heaviest weighted stocks in the whole stock market is Apple, as they hold about 7% of the index. So they hold a massive portion of the index. So if they do bad tomorrow, that's going to add more sell pressure, as big tech has essentially been the safe haven. So if you're going to take away the safe haven, that is going to be a big issue. And then on Friday, you do have non-farms. Now, non-farms, I think, could be very misleading. But again, ultimately understand that if we do get some sort of sticker shock and that have that massive drop in employment, that is going to be, again, bring a lot of recession concerns. Now, again, I think Q3 is going to be the worst of everything. I think that's when we're going to hit actual rock bottom, when things are going to be absolutely horrible. Not to say I think the stock market will price in a recession before that happens, or maybe even early Q3. I think could be a strong possibility sometime around there. But ultimately, I think that will be the worst of it, and then we will recover. But actually, understand that even though I think the stock market is going to start breaking away, we'll start recovering from that point. I do think, again, you do have to still understand that the economy in itself it's going to have many years to try to break back out of this. So just be very mindful of that. But over the next couple months are going to be really, really nasty. You're going to see a lot of layoffs. Things are going to get really nasty. But then again, I think in next year at some point, we're going to get some quantitative easing again and try to bring back demand, because I think at some point in this year, we're going to absolutely obliterate the market and destroy demand that Powell has been trying to do, I think is or at that point we've already getting the breaks, and these extra additional rate increases are continuing to do that. We haven't even gotten out of the phase one that we've talked about essentially all year. People thought we were going to move into phase two, which is essentially the pause on interest rates. We just haven't gotten that far because we haven't seen max pain, something that we've been told about multiple times in December and many other months previous to that about the current market for Powell to essentially start cutting rates. And I've given examples of these extreme conditions in which the Fed will actually start cutting rates, right? Like the pandemic or 2008 crash, right? Like you need something major for the Fed to start doing emergency cutting rates. And again, I think they will overshoot it with all these rate increases that they have. They're going to lose a lot of banks, but it's going to cause disinflation. It's going to kill demand because it's going to start killing small business. And then when small business gets wrecked, then at that point, it's going to affect a lot of people. Again, small business is like 90% of the workforce in the US. So just be mindful of that. So it's, again, very interesting spot that we're in. And again, every day is going to matter, especially now because we're getting a lot more banking news. So just be mindful of that. If something comes out, they're going to continue to tell you it's strong and resilient when the market's crashing. So that's just something that's a forewarning. You had your forewarning multiple times, multiple months. This is what's going to happen, right? And so nonetheless, we will see. Again, we need normalization. We need prices to come down. Something, again, Powell has talked about multiple times. You need prices to come way down so people can afford things. And at these prices, it's just not going to happen. So rates have to continue to be pressed until something breaks extremely bad before we can get out of this thing. So as far as like technical wise, something I've been talking about, 4200's the top right now. We're currently sitting at the 4085. We break that. We have support here at the 4052. We break that. Pretty much going down all the way down the 3800, like I talked about. You do have some speed bumps here. You have a speed bump here roughly around the 3920, which I think will still head down to the 3800, depending on again, the timing of everything. If the banks start really drawing panic, you can't predict how panic's going to be handled. And so if we do start getting massive panic, and again, we got so many black swans. So if a bunch of black swans start occurring at one time, you could draw so much panic that the market starts to crash. And then at that point, we are not really sure how far we can go, right? And you look back at it, the pandemic is a once in a century kind of event. And there were limit downs like every other day. There was 2 in some days, right? And it just it got absolutely crazy for 2 months. It was just straight down selling hardcore. Do I think we're going to be that bad? I don't think it's going to get that bad. I think we could see a possible solid month of just straight red, potentially limit downs. Again, it really just depends on what the trend of events and how everything unfolds. But again, this is the leg I've been really watching and wanting to watch. As I'll be DCAing on the way down from here, because I believe this is the final leg down. Once you price in a recession, then you can recover from that point because prices are normalized. You've killed enough demand to where they'll start quantitative easing again. So we'll see what happens there, but those are the levels we're watching. Again, there is, until the market sentiment changes, I don't believe we're going to break out of 4,200. And something I've always mentioned is we have been consolidating a lot around this area for many, many months, for essentially almost a year, where we've kind of tried to break out a couple times. Just wasn't going to happen. So the move out of here is going to be horrific. Being said, we could have a huge move to the downside and could bring us right to that 3,200, which is that normalization zone that I have down there. If that's the case, right, I think we could get extreme boom cycle. It's not going to be quick, in my opinion. At least I don't think it will. A month doesn't seem like a long time, but it sure can if the market's just going to completely start selling heavy. But again, we'll see. We'll see how the events play out. That's something you can't predict. You can be aware of all the events that are going on, but again, everything has to. If everything times out and everything aligns, it can get really nasty, or it can be mild to an extent. But again, there's even one of these. The whole recession being priced in is still a big move, right? If we price in another 20%, which essentially would give us ultimately around that average of a recession, which is roughly around that 43% overall. So if you took essentially the top of last year and compared it to where we are now, it would essentially put us around the 3,200 would be that normalization point for a recession, and then at that point, then we can recover off of there. So that's what we're thinking. We'll see if that plays out. But again, as of right now, there is no positive in anything that's currently going on, in my opinion. So Bitcoin still showing some strength, but it needs to break out over the 31K for this thing to be positive. Again, I think this thing it needs to hold the 26K. If it does break that, get the next level is roughly around that 24. Then we start messing with the 20K mark and then back down to that low that we had around the 16K mark. So really watching closely to see what happens there. We could even potentially push up to the 38, something I talked about. But if, again, you look on the monthly, this looks very much like a dead cat bounce. This massive selling, these aren't really bounces here. This massive selling, dead cat bounce, and roll over and potentially start selling pretty heavy. We'll see if that's the case. Even this little bounce and then pull back, expecting some sort of pullback roughly maybe around the 12 or so, and then potentially pick back up. I think is a very strong possibility. But we'll see what happens. Bitcoin halving is just around the corner. So expect one last dip just in the market and everything in general before one last takeoff. So we'll see what happens there. But let's see. Gold. We can look at gold real quick. Again, recession area. Actually got a body candle up over this on the monthly. The monthly actually opened up a full body candle. That's actually very interesting. Recession type move here on gold. Again, unless there's a lot of fear, gold doesn't really move like this. When you're talking about recession, this is when you think everything is going to implode. Everything is just fearful. And so gold normally spikes up very well. So we'll continue to watch gold and see what happens there. Tesla still battling here. It can't, like I said, it can't break the 166. We'll see if it can break the 151 and potentially expecting this thing to at least come down to 140. Again, depending on the events that go on, tech should sell off pretty heavy, especially if Apple does bad tomorrow. Could get us a breakdown of the 140 and then potentially even lower. Again, all depending on timing and what's driving the price action is really what matters. At that point, even the housing industry, it's already come down quite a bit. I think it could still drop more, but again, that all depends on timing. If you have a bigger corporation that's going to come out and start flooding the market with houses, then you could potentially get a pretty big fall from there, or something essentially happens with like they said, the new credit score adjustment that they have could lead to some really big problems there as well. But again, that's a very slow to react kind of situation going on there. So Palantir, another big one, like I'm talking on this downward level, something I want to try to accumulate on the way down. So I'm watching essentially that 717. I really like down here around that 625. Anything below 625, I really like as well. So really kind of watching this closely. It does have earnings next week, so just be mindful of that. Again, I don't think it's really going to matter unless something big happens. I know there's been a lot of talk about it potentially joining the index. If that's the case, it could get a nice rip up. But ultimately, understand that if we start pricing a recession and there's more bank failures, Apple does bad, it's not really going to matter. You might get a little pop and then it's just going to sell off because the general market sentiment's just really bad. So again, we're going to have to see what happens there. BA, again, BA is where it always is, in between the 220 and the 195. So we'll see what happens there. Hopefully this thing turns back over. Well, something I've always pointed out with Tesla and with JPM is you still have this huge push up here that hasn't been filled. So we're kind of looking for that gap. It's not really a gap, but these huge overextended moves, they need to be like retested at least 50% of that. So I'm expecting this thing to at least come down to 159, but we'll see what happens. Again, all depends on timing. JPM looking really weak, so we're about ready to fill this. I wouldn't actually be surprised if we gap below the 134 tomorrow and fill this gap tomorrow. potentially find our way down here at the 124. And like I said, we're going to fill this gap here too, and then potentially see us at 109, especially with all the sell pressure for banks. Goldman Sachs, all these big heavy hitters in the bank sector are not doing well. This is a break and a retest, and potentially making a new low down to the 283. Bank of America, like I said, it break retest this particular level here at the 30 mark. Starting to sell off, make a new low. Could potentially see 23. So watching that as well. But that's pretty much what I got. I don't want to get too much in detail. I think as of right now, what our focus is how is Apple going to do? What is going on with the banks as of right now? The non-farms, I would actually be kind of surprised if we did get sticker shock on Friday. It's always very much a strong possibility. We're waiting for those recession numbers to drop, so that can happen at any time. We just don't know when that's going to happen. But ultimately, right now, what we need to focus tomorrow on is banks and focus on Apple earnings and see what happens. If Apple does really poorly, that's your safe haven. That could add more sell pressure to the downside. We'll see what happens there, especially everything going on with China. So we want to see if it has a huge impact. It had a huge impact on Tesla, and considering that Apple really doesn't have cloud, so a lot of the services that they provide, it's really debatable if it's strong enough to hold anything like cloud does currently at the moment. So again, we'll see, and we'll go from there. So if you made it this far, I do appreciate you. Go ahead and drop a like, and until next time, I'll see you guys later.